the economics professor in Harvard University. Speaking to CNBC TV 18, she added the RBI still has room to cut rates.
The whole collapse in commodity prices, which I think is a net good for India. The second is a slowdown in growth in China, which has global implications. From the perspective of India's exports, it has smaller negative effects because it's only about 4% of India's exports that go to China. There's a weakness in advanced economies. Though they are so-called rebounding, there are still weaknesses which should impact demand for Indian exports. Fiscal deficit, I really don't see an argument for moving the target. I think that's important to stick with the target that's in place. The rupee still doesn't seem to be on a strengthening trajectory, so with if there is further depreciation of the rupee coming out of international events, then that can have the opposite effect and bring inflation up. I'm sorry. And so, on net, I think that it would be good to see a few more rate cuts. The Indian financial markets should prepare for turbulence going forward. And the reason I say that is because the global economy, while recovering in some areas, is kind of bumping close to the bottom, which means that things can go bad relatively quickly.
Under the commodity markets, crude oil prices slipped towards $37 a barrel today as the markets remained under pressure.